Welcome back, everyone. It is Tuesday, March 12th, and this is Not Your Advisor with NYU Grad. Hope you had a good day, and I wanted to welcome a few hundred new subscribers to the Substack and the podcast. For premium members, I'm just giving you guys a heads up. I'm going to make this entire podcast and content available to all subscribers, both paid and free today. And there's going to be a little bit more housekeeping, just an intro on what the Substack is about. So if you wanted to, you can just simply fast forward to where I go through some of the premium charts, or just stick around because I might crack a joke or two, or give some restaurant recommendations in the city. But I'm not going to go through premium balance areas today. I'm going to try to keep that reserved for premium members. I am going to go through the broader markets, which are important right now and probably more important than the balance areas, to be quite honest. And I'm going to go through some of the semiconductor group names as well. But let's jump right into it. So welcome aboard to the few hundred that have signed up from finding the Substack through the featured Substack page. I am humbled that you would subscribe. So I produce a few areas of content. Number one, being a daily podcast that I try to aim for under 15 minutes every day to summarize the stock market action, no politics or no advertising. I created that podcast because I couldn't find it myself. Every financial podcast I listened to, while they had great content, it would go on for like an hour every day, and I'm trying to listen to like 4 of them, so that's 4 hours right there. And then in between the content, there's they go off on a tangent on politics, or they go off on promoting other products, or just ads, and it's just like a big time suck when you're trying to maximize your content digestion, right? Because not only are you following finance or stock podcast, you're also maybe listening to true crime or audiobooks. So I get that there's a lot of options out there. So I wanted to make something that was very concise. So if you follow me every day, the free section of the podcast typically is anywhere from 5 to 15 minutes. And then I ask the premium members to stay on, and we go through some premium content together. I also have a Substack notes section where it's kind of like Twitter/X, where I post intraday thoughts. That's number 2. I also post written content right on Substack. And then I also send out Substack app chats that are private for premium members. If I see something that is alert worthy, I'll send that out through the chat app, and you'll get an email for those premium subscribers as well that, hey, there's a new chat that NYU Grad has initiated. So those are the primary ways that I send content out. Just as a housekeeping item, you can also, except for Spotify, you can listen to the free version on any podcast platform. But if you're a premium subscriber and you want to listen to the full length, you need to fetch your private RSS feed link right from the Substack Substack notes page. Like for each episode, I have the Substack notes page, and then you would paste that into your podcast of choice to listen to the full one. The only negative here is that Spotify does not allow private RSS feeds, but most other platforms like Apple Podcast, Google Podcast, and pretty much everyone else allows it. So if you have trouble with adding the premium podcast to your podcast app, email me. My email is nyugrad@protonmail.com, or just send me a message right on Substack. So the other thing I wanted to kind of go through with the newcomers, just a little bit about me. There is an about page that you can go more deep dive, But just as a 30-second elevator pitch, right? Like, I really believe that financial freedom is not free, but the treasure is worth the pursuit. And I mean that from the bottom of my heart, because I am no longer tied to a W-2 desk job career. I'm 100% now managing my own wealth and trading. And I basically want to build a community where we can all learn from each other. But in the meantime, I am also sharing what I've learned and what works for me. There are many ways to trade markets, whether it's options. There are many. You can just buy stocks outright. You can also, just do 401k investing. You can do dividend income investing. There's just many ways that you can skin this cat. My area of focus is trading balance areas via auction market principles. And there's a great, I guess you could call it a prerequisite reading, and I'll link it in the show notes. It's called Market Profile Charting for Dummies Remastered. That's the first link. You should definitely take a read. It kind of goes through the methodology and what is market profile, what is auction market principles. But to sum it up real quickly, there are only a few phases the prices of anything can be in. So whether you're talking about stocks, houses, sneakers, luxury watches, whatever it is, those prices are either in balance, or they're seeking a new balance area, or it's just random chop. Those are really the three signals or phases, I should say, of prices. And it'll become more evident the longer you're listening to the content and following along with the Substack, as well as check out that post. But you'll also see that I have a very specific format structure that I go through this every day, and it's both for myself and for you guys to get in this repetitive mode. I can't cover everything and its methodology on one episode, but over time, you should be able to, at your own pace, start to analyze what happened in the markets today on a macro level, as well as granularly, the forest versus the trees. And that's why I go through this like peeling the onion. Excuse me as I take a quick sip of my Nespresso. If you haven't tried Nespresso coffee at home, I highly recommend it. It saves a lot of money. I mean, if you're spending $8 per cup at Starbucks every day, you can save a lot of money having an espresso machine. All right, let's jump right into the numbers here and today's action. So what I typically start out with every day is covering breadth. The reason why breadth is so important, that's breath with a D, not like bad breath, good breath. BREADTH. So I have a few longer term readings and short term readings. Breadth is beautiful because I use it for both the forest and the tree views. If you follow breadth every day, you start to get a good pulse and read on the intentions of the overall market before you even look at individual stocks. And you'll see what I'm talking about. So today we had 750 new highs on the NYSE, and we had 150 new lows. 51% of shares were advancing versus 43% declining today. Looking at the 50-day moving average, 34% of stocks were below its 50-day moving average. 32% of stocks were below its 200-day moving average. The Dow opened right at where it closed. We rallied and then we sold off right around lunchtime, which is quite odd because usually you have buying algos during the lunch breaks, it seems. But we then rallied across all indexes to close at the highs. Looking at the mega caps, surprisingly, all of them, well, Mag 6 were up. Tesla was still down marginally. It was down 0.13, but it did close red. But I'll give it a pass. I'll just say Tesla closed even. But it's been very rare to see all of the Mag 7 green. We had it on the, I believe, the Monday session, was it? Yeah, yesterday. But it's been very rare if you've been following me. But let's go through how they did. So Microsoft up 2.6, and I also rattle off percentages versus how much they were up in dollar amounts. Because if I tell you Microsoft was up $10, doesn't really give you context, right? I always try to deal with percents. Microsoft up 2.66%, Nvidia up 7.16%, Amazon up 2%, Meta up 3.34%, Google up 0.5%, Apple up 0.28%, and as I noted, Tesla was down 0.13%. Just in general, though, many of the two things happened. You had a very predictable bounce in the semiconductor group. I noted to my premium members that you have to watch the 900 level on NVIDIA, and I wasn't going to be initiating any new longs until I see that. Doesn't mean I'm going to go all in, but I needed to at least see that before I initiate new bullish positions. So that happened today, which was good. The second thing that's happening is there were a lot of software names that were getting crushed. If you go to the ticker IGV, so like IBM, Girl, Victory, IGV, and you look at the component stocks in that basket ETF, many of those names were being sold off as early as last week, even before the NVIDIA sell-off or the semiconductor sell-off. They all bounced today. Companies like Workday, ServiceNow, CRM, they are all catching a bid and fighting back. So those two conditions led to a fairly bullish day today. The sectors, if I had to ask you to guess, right, you can probably guess technology-led, and you are right. Technology was up 2.32%. Then it was consumer cyclical, communication services, consumer defensive, industrial, financial, and healthcare were all green today. The leading to the downside really was only one, which were utilities, down 0.91% today. What else kind of stuck out? So this morning was the very important CPI data. If I had to summarize it, I mean, you can read the report, but it came in a little bit over. It came in a little hotter than expected, but not much. So the sentiment I felt the market was saying is, wow, it could have been a lot worse, but it wasn't. So we had the condition where prices could rally today. But just to kind of look at the headline number, you had core CPI that rose 0.4% month over month. You also had the supercore CPI, which is what Jerome Powell follows very closely, up 0.5% month over month and 4.5% year over year, which is the highest since May of 2023. So basically a year ago. Which might be a little concerning for rate cut watchers. As I noted, NVIDIA retraced basically back to like 61.8% fib retracement of the sell-off on Friday. The semis, as I mentioned, clawed almost all the way back. And we finished at the highs. That really was what stood out to me. It's usually how you finish the day is quite more important than how you open. Let's see. This is typically, by the way, where I would wrap up for the free members and just kind of rattle off like what to watch in the coming days. But let's go through some charts today, and I'm going to make all of the show notes available to free subscribers as well. So taking a look at just the general markets, I'm opening up another tab here. So you might be asking, like, am I bullish or bearish, right? If you're new to me, and I try not to think of those terms because I think when you pigeonhole yourself into, hey, I'm bullish or bearish, you're almost telegraphing, and it impacts your own trading. Let me just take a sip real quick. So I try to set up conditions that I watch for to tell me which way to trade, right? Like, I don't want to tell the market, I don't want to try to tell the market what to think. It's not going to listen. It doesn't care what I think. I'm just trying to see signals. So last year, during the end of the summer, during the sell-off, if you recall, I was basically reciting this every day on the podcast and on Substack, that you need to watch, while this is on the way down, you need to watch one of these three turn positive or bullish to close out your shorts. Number one, the Mag 7, are they or are they not above their 50-day moving average? Can they fight back above their 50-day, right? If stocks were under the 200-day, there's nothing to talk about, right? It's going to be bearish. We also need to see breadth improve. At that time last summer, breadth was horrible. We were like, 90 new highs versus 1,200 new lows every day. I said that needs to improve. And then the 10-year yield was very bullish. Like, it was rising pretty fast, above 5%. And that was not conducive to risk asset prices. And I said, out of those three, you need two of them to flip to the bull side for it to reverse. And it did. And I'm saying the same thing now. We bounced hard in November into the Santa Claus rally. And there's nothing really to worry about. Yes, I know we had a bearish engulfing on NVIDIA on Friday. And I said on Friday, everyone calm the F down, right? Like, yeah, if you bought on Thursday at the top, you need to panic a little bit, right? There was no entry on Thursday. So first things first, you have to buy at the right price location so you're not whipsawed like that. But if you were already in NVIDIA at like 300, 350, or even $80, there's nothing to worry about right now. You need to watch it, but it's not time to panic, right? So I'm going to say the same thing. In order for this market to turn south and for this bull market to roll over, it's going to be a process. We'll have to first see the semiconductors and the Magnificent Seven all lose its 50-day moving average. Some have not even lost their 21-day EMA. So we're good there. Breadth. Who is winning each day? Is it new highs or new lows? Right now, it's new highs, beats new lows every day. The third, the 10-year needs to be below, for this to change, the 10-year would have to cross above 4.5%. We're well below it. We're like basically at 4.1. So all three conditions are bullish right now. So there's no reason to try to telegraph and try to pick the top, right? Let the market tell you when it's ready to close off this bull market. Don't be early on it. So those are my three tempos, but let's go through some charts. If you go to the show notes on Substack for each podcast, all the way at the bottom of the show notes, you're going to see these charts. So you can save them, you can print them, or you can just refer to them and ask me questions about them afterwards. So the first one is the Dow Jones. Taking a look at this chart, we're above the 50, right? Friday we tested it. We pierced the 21 day. We're kind of piercing it last week 3 times, but it's being kind of defended here. And now today we're well above the 21 day EMA. We're above the 50 day. So there's nothing to worry about on the Dow. The SPY, same thing. We have not even touched the 21 day EMA really since like February, but we never even touched it. But there's nothing to worry about on the SPY. QQQ, we tested the 21 day EMA a few times since December, before that Santa Claus rally, but we never really stayed there for more than a day. Again, there's nothing to panic here. When you see the QQQ break the 50 day and stay below the 50 day for multiple days, you send me an email. Apple, this was falling off a cliff. It needed to get some type of support, and it has, but we are seemingly trying to backtest the 21 day EMA. However, even if it does, you have a falling 50 day, you have the 200 day above, and it's still living under a trend line that goes back to the .com crash. All in all, this looks long-term very bearish on Apple. We might get up to 185 from here, 190 maybe, to backtest the trend line. But longer term, Apple looks pretty bad here. Amazon, really nothing to worry about. I mean, if anything, this is setting up to potentially break out again. We, on Friday, tested. We pierced the 21 day EMA, and then we closed above it. Today, we touched it, defended it, and we were up 2%. Anything above 177, 78, that's going to be lifetime highs again, past 180. If Amazon goes north of 180, I'll probably buy. There's really nothing to worry about here on Amazon. Google, not as good. We back-tested the 200-day moving average before we bounced. We are now back-testing the 21-day EMA. We'll see what happens here. But Google, in general, has been not as strong, part of the Mag 7. Looking at Meta, for those that are new, I have been basically sharing the anatomy of a trade using Meta. You can go... Well, you won't be able to see those because they're behind the paywall, but I'll just kind of walk through this with you. So Meta has been bull flagging since January, and it has been threatening a breakout out of this balance area, and I tried to catch it 3 times. I chickened out once. I just sold at a profit, and then it finally broke out. I caught it at like 501 on the breakout, and I sold it at 517 on the NVIDIA day on Friday. I just didn't like the way NVIDIA was trading that morning, and I knew if they sold that off, everything was going to sell off. And we keep coming back to this magical area near that 470, 480 level where the majority of time and volume have occurred for facilitating trade on Meta. And we back-tested the 21-day EMA. Now we're bouncing. We're trying to break out of this area once again. But the way I look at this is, there's several ways to trade this. You could have bought this at the backtest of the 21-day EMA. I've already made a profit on the breakout, right? The price is below my initial entry of 501. So I can either buy now, or what I'm most likely going to do is I'm just going to wait. I'm going to wait till it can exceed the lifetime high again. And I'll get in on that breakout. So there's no rush here. I'm not... Where we are in this stage of the bull market, we're very overbought. So it's not... I don't have an itchy trigger finger to go all in. If anything, I'm very pensive about it, and my stop losses are less than 3%. It's not a time to get too aggressive right now on the long side, in my view. Looking at Microsoft, it was a little weaker, but it's strengthening up here. It tested the 50-day moving average a few times. Above 420 is going to be lifetime highs. So nothing really to worry about right now in Microsoft. NVIDIA, as I noted, we had that bearish engulfing on Friday. Monday was kind of an indecisive day, and then today we rallied pretty hard, up 7.66%. It's really I look at NVIDIA as almost like an ETF at this point of animal spirits. There's really no entry here, but I do follow it, obviously. Tesla looks horrible. My gosh. It just cannot catch a bid. That's all I really have to say about it. All right, I'm going to go through some of the semiconductor leadership names outside of just NVIDIA, and then we'll wrap it up. So you have Analog Devices. It has a balance area that formed from Thanksgiving till now. So if you are bullishly inclined and you like the semiconductor group and you don't mind the wild swings, above 200 as it breaks out of this balance area would be a good entry point with a tight stop. Or if you're bearish on semiconductors, you can play the reversal from this balance area, potentially going back from like 200 all the way down to like 183. So that's how you should be looking at the ADI chart for Analog Devices. You have Applied Materials. It bounced off of the 21-day EMA to the penny. But we're still underneath the Friday sell-off. So it shows you relative weakness for Applied Materials versus NVIDIA, because NVIDIA has bounced back much stronger than its peers in the semiconductors, and that's why I watch NVIDIA so closely. So yeah, Applied Materials is still underneath Friday's close. So that's a little bit concerning. AMD, same story. We sold off Friday with NVIDIA, and then we never got as far down to the 21-day EMA, but we're still well below Friday's close. Something to watch. I'm assuming that this is going to be a trend now. So AVGO is Broadcom. Yep. We pierced through the 21-day EMA, and we are still below Friday's close. KLA Corp, this is a theme, right? And I didn't set this up this way. I literally just loaded up charts from the leading semiconductor group. We are same story. We're still below the Friday close. We're trying to bounce off the 21-day EMA. Lam Research, LRCX, same thing. Still below the Friday close. We are sitting and back testing this 21-day EMA, and we're holding it. Microchip Technologies. This one looks like it may be breaking out soon. So the ticker is MCHP, above $93.63. I think might be a buy. But if you, I would put very tight stop on this, because just everything in semis has such wild swings. But keep an eye on MCHP. Monolithic Power, another one. This actually might be setting up as well. I mean, it's a pricey stock. It's a $730 stock. But it's kind of setting up here with another balance area. Yeah, this might look like it could set up for a breakout of this balance area. So watch Monolithic Power, MPWR. Micron Technologies, it's near lifetime highs here. I'll post the long-term chart of Micron as well as the close-up view. I mean, you can get in right here at like $97. Put a stop right at 90, and anything above like 105 is lifetime highs for this. Yeah, keep an eye on MU, Micron. NXP Semiconductors, ticker symbol NXPI. A tight little balance area here in that 250 to 260 range. Another one to watch, ticker symbol NXPI in the semis. Palantir, so it broke out of 3 balance areas. I posted a lot about Palantir last week, so you refer to some of those posts. It is pulling back to the 21-day EMA. I need to watch this a little bit more because this bull flag potentially it could fail. And I want to note that the PE is like 280, 300. I mean, AMD, SMCI, their PEs are under 100, like 80 and 90. Why am I going to pay 300 PE for Palantir? But yeah, you can watch it. They'll put Palantir on your list. TXN, Texas Instruments, pretty clean balance area here from 2020 to now, between 140 and 189. Just keep watching it. It might break up or it might break down, but nothing to do yet. So that's just a little sample of the format for free subscribers. I'll open this up for everyone. There is a promotion that I'll be doing till the end of the month where you can save 20% on the annual membership. Also, if you want to try the premium out for 30 days and you're not ready to pay for the premium, all you have to do is message me on Substack through the app or email me, nyugrad@protonmail.com, that you would like a 30-day premium trial, and I'll set that up for you. No problem. So with that, I will see you all after the Wednesday session. Have a great evening.